world into America. But just opening a bank account with your Patriots Act is a virtually impossible equation. In fact, I think it's easier to buy a gun in America than open a bank account.
So talk to me. So,
but I want to finish and answer your question. It's less about how sophisticated or clever a portal is. It's about whether we actually know how to set up a structure for the person, do the tax, the compliance, open a bank account, etc., and then necessarily find the partners. And it might be Realty Mobile, might be fund, it doesn't matter. But the point being is we partner with people here to provide the opportunities in terms of where we're looking at. And for me, it's all about what I spoke about with nature. It's about partnership. The 21st century is about partnership, finding the right people and partnering with them.
How difficult is it to get the foreign investment money into the United States, and how do you do that? Because that's a big, big issue for most people. How are you getting the money to migrate into the United States and deal with the regulations?
Fantastic question. So Andrea has
a fantastic guy.
Well, it is. I mean, Andrea has a bit of personal experience about this. Believe it or not, we live in the third world. I don't know what you guys think is your opinion of a South African or a South African bank, but when I send money in South Africa, 3 seconds later, your cell phone goes bing, and the money's in the bank account. We paid money on Friday from Wells Fargo to Chase Manhattan, and yesterday being Wednesday, no one at either bank could tell us where the money was. My point being is that that's just between two American banks. Can you imagine what it's like in terms of investing internationally? So it took us over 2 years to work out how to open a bank account for a foreigner to invest in America, and through many, many, many hurdles. And to be honest, it had nothing to do with crowdfunding. You see, we've been helping people invest internationally in real estate for over 10 years. And we've done 10,779 transactions. So what we're doing now is that crowdfunding is just our enabler to make it more efficient. And that really, I think, for everyone at this table, is what should be so exciting. Because you're only 4% of the world's population, yet you've got 29% of the world's wealth. But that's changing, and it's changing fast. And that doesn't mean you're getting poorer, it means the world's getting wealthier, which means you can get wealthier with it.
So, just quickly, what do you charge investors for a view on the marketplace? What, if I want to go to Fundrise, what kind of points am I getting as an investor? What am I giving up? And as a sponsor, what am I getting? What am I minimizing as a sponsor? And do I get a higher yield as a result of investing with you as a result, or is that all sucked up in the arbitrage? This is the Crossfire. Remember, I have to ask the tough questions.
As an investor, you're not charged anything to invest in Fundrise. As a sponsor, we're typically taking about 2% of whatever we're raising you on the platform. And then there's an ongoing software service fee for using the actual technology of the platform to manage that investment.
And do you take any of the promote from the sponsor?
No.
Appreciate it.
So it's a two-part question. I guess on the debt side, we charge the borrower an origination fee, and that's anywhere from 1% to 3%, depending on the size of the deal and the complexity of the deal and how difficult it's going to be to raise that capital. And we'll also charge, similar to Fundrise, a technology or servicing fee, and that is just to administer the investment on behalf of the crowd as it relates to the individual borrower. On the equity side, we are charging a placement fee to the principal, to the sponsor of the deal. We are also charging a technology/servicing fee, and that depends on the investor's investment in the deal. And subsequently, we will also take a small piece of the promote on the back end from the sponsors, but that comes out of the sponsor pocket, so there's no double promote there. But again, that's a math game. So if someone would rather pay a larger fee up front, we can account for that. But if they prefer to have us ride the deal with them, we'll take a smaller fee up front, and our normal fee load up front, and a piece of the promote on the back end.
We do not charge investors any fees at all. We charge our borrowers origination points up front, and those range from 3 to 5 points up front. And we sometimes take a spread of 1% between a yield. So maybe we do 12 and 4, and the investor would get 11.
And is that disclosed to the investor that you're basically taking the spread?
I'm not sure, actually. I'm not sure, because we've really only done it once, I believe. But we do try to be transparent with absolutely everything. And there's actually been a reverse where we've given up some of our points into the yield to keep yields high on a couple of deals.
And Scott?
Ours is very simple. We don't charge the investor anything. And from the sponsor's perspective, there's no fees in the beginning, there's no fees in the middle. We have a hurdle rate and we have a performance or promote upon a hurdle rate. We've got two plans. One is an income plan, which is a 5-year investment, where it's a buy and hold strategy. And the second one is a growth plan, which is a more aggressive development type proposal. The growth one will have an 11% hurdle and the income one will have an 8% hurdle. We basically don't earn a cent until the investor and the sponsor has made money.
And so do you take the spread over the hurdle? Is that the way that it works?
Correct. So we share in the upside over the hurdle.
Over the hurdle.
So it's very much comes back to the 21st century. We believe that if we want to invest with people and if people want to invest with us, then our interests need to be aligned. If we're going to go into business together, then we should only benefit on the back end just like everyone else.
How do you establish the hurdle rate, though? Because wouldn't it be in your interest to establish a very low hurdle rate for some, or a very low income rate, and then take as much big as you can off at the top of it? How do you come to the balance of reasonableness?
It's a fixed hurdle rate. On a growth opportunity, it's 11, and on an income, it's 8.
So just offer it, and people want it, they take it, and then you take the risk on it.
Exactly. And I mean, so look, from an investor's perspective, again, you've got great opportunities here in North America, but they're not the only opportunities in the world. And you know, if you had all your money tied up in American property or American real estate in 2007, it wasn't necessarily the best thing to be doing on the planet. So
now you tell me.
Well, Dolph was trying to tell you guys for 10 years before that. But anyway, my perspective, my point of view is that there's great opportunities here, but there's also great opportunities elsewhere. And so as an investor, whether you're accredited or unaccredited is irrelevant. The point being is that you need to look and see what other opportunities are out there. Just because you live in New York doesn't mean you should invest in New York. Just because you live in America doesn't mean you have to invest in America. From a sponsor's perspective, if I've got all my money and everything is tied up based on the risk of the ups and downs of the American market, I've got a lot of risk, a huge amount of risk. You know, so because you can have any kind of geopolitical, economic, I mean 9/11 just as an example, overnight, boom, things can change. Whereas if I'm a sponsor and I'm now raising money from the global community, you know, I'm relying on not just the first world in America, but the rest of the world. Crowdfunding at the moment is 76% in North America, 22% in Europe, and 2% in the rest of the world. Now, they actually have more than 50% of the world's wealth, and they're coming online. And I'll tell you what, they're coming online faster onto cell phones than they are onto anything else. So as a sponsor, you know, I want to have access to that capital because it's a lot less risky. And long term, it's a lot more sustainable. And if you think about it from both sides of the fence, both are going to benefit from that diversity.
They can, although the old saying that when the United States sneezes, the rest of the world gets a cold. So you're not immune, you're just dealing with balanced basket.
Not necessarily. In 2009, the United States got more than a cold. I think it was in intensive care. And Australia was the only country in the G20 not to go into recession. Their property market grew by 8.6% in 2009. And you know, we not only grew with the market, we outperformed the market. So it's not gut feel. You know, I've got an entire book here, which is our trademarks global property system, where you take all the fundamentals of property, and based on the research and the fundamentals, you put it together, and it allows you to make an educated, informed decision. And yes, when America sneezes, the rest of the world gets a cold, but that doesn't mean there's not other opportunities around the world. And again, I said earlier, investing is actually common sense. And if you've got common sense, and you're prepared to look at it and not be told by some financial guy that's trying to confuse you with fancy numbers and fancy reports, but you just use common sense, that's when you'll be successful. And the beauty with crowdfunding is it's an enabler to common sense.
Thank you. Let's shift a second here and go into the proprietary portals and talk about the Guggenheims and why are you even interested? Why are you even here? What do you see as a big institution like Guggenheim? What do you see in crowdfunding, and where are you guys going? Because what do you have, 200 billion under management? I think 200 billion. So you have nice watches. So tell us how to tell time here. Tell us
It's a
what
Timex.
Yeah.
Man, it's nice, but
Yeah.
it's $20. But you can buy it for a lot more if you want. Yeah, so I'm certainly what we do at Guggenheim is invest. So I run venture capital at Guggenheim. So we're an island in the sea of the larger Guggenheim, which is largely a credit shop. As you said, I come out of the world of electronic trading, so I was fortunate enough to, my first job out of college was with the first electronic competitor to the New York Stock Exchange and NASDAQ. So you see the world through kind of the lens of your experience, and better lucky than good, Instinet grew to be a fairly big company. As you said, went public and was sold to NASDAQ for $1 billion. So looking at how technology can change market structure is something that I enjoy. And crowdfunding, huge umbrella, but many aspects of crowdfunding remind me of how the market structure changed in the equity markets 20 some odd years ago. And there's similar opportunities, I would argue bigger opportunities. The equity market is a small market compared to other asset classes around the world. So yeah, it's one of the main areas, if not the main area that I focus on, and we love the space.
Now, do you invest in the space, or are you actually creating your own product for the Claymore type funds, the ETFs that you now have, and all of the entire amalgamation of services and funds you offer? Yeah,
so I invest in the space, so personally and also on behalf of Guggenheim, we don't reveal our investments, but through personal investments and Guggenheim investments, we've made about 8 investments in the space. So in the portals themselves, in the technology stack that has to be built above the portals once they gain liquidity. And we're working internally with Guggenheim to potentially build product using crowdsourcing in many aspects of Guggenheim's business.
Let's talk about Carlton for a second, because we're dealing with an entity, a lot of success, and congratulations on that. What brought you to go online with your raises, and what did you think about before you did that? Do you like the way it's gone?
Well, a bunch of questions there.
Yeah,
but I will reiterate what Scott had said, which is for us, we're a real estate investment bank. So we have been in real estate. This firm has been around since 1991. All the executives there have at least 25, 30 years of experience, specifically in real estate investment banking. And therefore, this became an enabler. This allowed us to market the transactions that we already do globally through another outlet, which happens to be the internet, which we've been so lucky to have been given since October and November of last year. But what we do is, what interested us was the fact that there are so many people that want to invest in real estate on a global basis. And what we have is we have offices around the world, so we're able to touch investors, the everyday investor, that can be in China, can be in Australia, can be in Vietnam, and actually in the Middle East. And so we're touching each and every one of those people, and now with crowdfunding, we're able to be very transparent. We show them the deals that we're working on. They go on the portal, they can see everything that we see, and they can make an intelligent and a decision to invest in this real estate transaction on their own. Each of our deals, the minimum would be $1 million. So we're dealing with people that understand real estate, have invested already in real estate, and it gives them an opportunity to see the real estate through the eyes of our portal. Recently, actually Tuesday night, which is why I'm still a little tired, we just got back from a 12-day visit. I took my CIO over as well, so we had 2 different platforms. We went to Monaco, Bahrain, Abu Dhabi, Dubai, and what we were doing was 2-pronged. First, we were going after family offices and high net worth individuals to teach them about our crowdfunding portal so that we can still communicate with each and every one of our existing clients and some of the new clients by allowing them to see all the transactions that we get on a weekly basis so that they can make their intelligent decisions to invest. On the other side, my chief investment officer had me going to meetings with new deals. And you know, as Scott said, it's not just the United States. There are people, there are institutions that want to invest in real estate around the world. And there are some great markets out there besides the US to invest in. So we really are doing it both ways, and at this point on our crowdfunding platform, we have deals that are international and not just the United States. So we enjoy it.
And what's harder than you thought?
Maintaining the website. Because again, we're a real estate firm, we're not, and I use the word loosely and I don't mean it in any derogatory, we're not a technology company. So for us, we need to hire the proper staff just to maintain our portal because we get so many hits a day as it relates to our investments. Because you're talking about investments that are between $50 and $300 million deals.
And how many hits do you get a day?
We probably get close to about 700 hits a day now.
And how many investors do you have that are registered with your site?
Registered investors were about 3 dozen at this point, and they're coming in now. But again, we've only been around maybe 60 days.
Mm-hmm.
So for us, it's really a new venture, but at the same time, it's been very exciting, and it's just hard to maintain that portal at this time.
And how many employees do you have?
In the company or
Yeah.
working on this?
In the company.
We have 48.
And how many
then we
working on
have
this?
we have about another 20 that are abroad.
And how many work on this particular portal?
We have 5.
5 full-time,
5 people full-time on the portal, but again, they're real estate people. So they're monitoring, they're answering the questions, they're taking them through, and again, everything we hope will be automated from the back end to the verifications. So it's interesting. We're enjoying it.
Well, you're doing great. And Stefano, you've been quiet on the end there. You're the tech guy, and